In this video, I'm going to show you one of our 3 trades that we teach you during Trader Light. This is called the thick orange trade. Now this trade is only going to use the top set of indicators, the TNTs. And we know there's 4 lines. There's the thick orange, the thin orange, the dotted blue, and the thick blue. Now we're only going to be paying attention to what the thick orange line is doing for this particular trade. And we have a couple of other trades we're going to teach you. One we call the pressure trade, where we use the pressure and the majors and minors. And then we're also going to teach you the 10-point trade, which uses all 3 sets of indicators. But this one is just using the thick orange. And what happens with the thick orange is it tends to cycle up and down. You can see if I look here at the Euro USD, I'm going to pause this for just a second. If I look back, you can see well, let's go right here. You see how that thick orange line is up at 0? That's the top of its range. So when it gets up to the top, it's very likely that it's going to have a bounce and cycle back down again. So if I click forward now, you can see how now the thick orange line is cycling down, and it gets to the bottom at minus 100. So the top of the range is 0, as you can see over here on the British pound US dollar, and the bottom of the range is minus 100. And it tends to cycle up and down. So what we look for in this thick orange trade is for any of the thick orange indicators to be at either 0 at the top, like in the British pound US dollar, or minus 100 at the bottom. Now you can see these other ones, it's not quite at the bottom. This one's at 80, this one's at 8, but this one's actually the Australia dollar and the British pound are at those ones at the bottom, ones at the top. And so I'm going to, what we're going to do here, you can see on this chart, there's 3 minutes and 19 seconds left. I'm using the replay function, so I'm going to start this back up, and this is going to start counting down. So what we would do is about 5 or 10 minutes before the top of the hour, we would just come to our charts and check them. And this chart you're going to be familiar with. This is called our light 6 major chart that is installed on in your green charts. And when we sit down at the computer, we're just going to scan across here and see if any of these are at either minus 100 or at 0. And we can see that the Australian dollar US dollar is at minus 100, and the British pound US dollar is at 0. So what we're going to do is we're going to wait for this to count all the way down to 0. And this candle, these are 60-minute candles, this candle is going to end when this gets to 0, and a new candle is going to start. What we're going to be looking for is this thick orange line, if it's at the bottom, to kind of make a check mark up, a pretty steep angle up. And if it's at the top, we're going to look for it to make a steep angle down. Okay? And what we wanted to do is move about 8 to 10 points, either up or down. So if it's at minus 100, we want to see this move to about at least 92 or lower. So 92, 85, 80, something like that. We want to see this line move up. And at the top, we want it to go from 0 down to at least 8 or 10, somewhere in that range or more. So we're going to wait. We've got about 1 minute 40 seconds left. And when the new candle starts, we're going to watch to see what these 2 lines do. If this one checks up and this one checks down, we're going to take the trade on the Australia dollar US dollar and the British pound US dollar. Now this signal happens quite often. You can see right here, it's happening on 2 charts at the same time. But we still need to wait until the top of the hour, and we need to see if at the bottom it points up and at the top it points down. So we've got about 1 minute left, and what's going to happen is if I was going to take this trade in the live market, I would wait to see if that check mark happens, and then I would immediately switch over to my MetaTrader 4 platform, and I would place the trades on the Australia dollar and the US dollar. And so the criteria is we want to see that it stays at minus 100 or stays at 0, and then we want to see that it check marks up or check marks down. So we've got about 39 seconds left. We're just going to wait and see what happens here. And then we're going to possibly take a trade if the check mark happens. We've got about 20 more seconds. And as soon as this happens, I'm going to pause it so that I can show you what has happened on these two currencies. We've got about 12 seconds left. And when it gets to 0, you're going to see a new candle start. And then we're going to see if that orange line makes the check mark. So we've got 2 seconds, 1, and the new candle. I'm pausing it right there. Okay, can you see how on the Australia dollar, US dollar, it did make that check mark up pretty steeply, and it went from -100 all the way up to 83. Okay, so it went about 17 points up. So that's enough. We want it to go at least 8 to 10 points up in order to take the trade. Now, on the British pound US dollar, can you see how it stayed at 0? It didn't make the check mark down. So we would not take the trade on the British pound US dollar. But I would immediately, if I saw this happen, I would switch over to my MT4 CoinX software and I would place a buy trade on the Australia US dollar. I'm going to show you how that would look now. We would enter the trade right when at the bottom of this candle, right when the new one's starting, right? Because this candle and the new one are going to be at the same place. I would place the trade, and you can look for this to move between 3 and 5 pips. And we're going to teach you more on how to identify when you should go for 3, when you should go for 5, and possibly when you can go for more. But in this case, let's just say that we're going to go for 5 pips. So what we're going to need is for the price to come up and cross this line. So I've set this at 5 pips, you can see. And I'm going to set a stop loss, and in this case, I'm just going to set a stop loss of 10 pips. So you can see I'm going to go down until it gets to 10. And now I've got a stop loss, and you can see that if I shrink it up. My take profit is up here at 5 pips. My stop loss is down here at 10 pips. Now I'm just going to see what happens if the price comes up. And we know that about 80 to 90% of the time, this trade is going to be a winner. That it's going to come up, it's going to hit my take profit, and I'm going to win the trade. Now, 80 to 90% win means that occasionally it is going to lose. And that does happen, but that's just part of trading, something we need to expect and accept and be okay with that, because we know that if we have something that's going to be 80 to 90% effective, we can win the majority of the time and we can grow our account. And that's the name of the game, is growing the account. And when you do that, we're going to add more money to your account so that you're able to trade a bigger and larger volume and make more and more money. So I've sped this up, and we're going to wait and see what happens and see if this crosses this take profit line before it hits the stop loss. So you can see here we have about 40 minutes left in the hour. So we're about 20 minutes into this candle. It hasn't gotten up there yet. It moved up probably about 3 pips. We can measure it here. It got up to 3.2. So if we had gone for 3 pips, we'd already be out of this trade. But we took 5 on this. So we're going to see if it gets up there. I'm going to speed it up just a little bit more. And you can see that British pound, it kind of stayed flat. It's kind of going up and down now, but we want to see that line check mark down right at the post within like the first, I'd like to see it in the first 10 or 15, maybe 30 seconds. Now it's coming up close to that line. We're almost there. We haven't quite crossed it, so we'd still be in the trade, but we're definitely up, 3 or 4 pips. And we're just going to continue to wait. So you can see this almost a new candle starting. So we haven't quite gotten out of that trade. If we had taken the 3 pips or even 4 pips, we'd be out of the trade. But we're an hour into it, but we're still in good shape. We're still profitable. And you could have closed this out with a smaller win, but I'm going to hold out and see if this gets up and passes through the line. And so, by setting your take profit and your stop loss, you could just leave your computer, go do whatever you're doing and let it take care of itself. And knowing that it's going to win 80 to 90% of the time, there it just crossed it. So we'd be out of the trade. You can see we've got 22 minutes left. So about an hour and 38 minutes it took for that to get 5 pips. Now we could have taken 3 pips in about 15 minutes. But to wait for the 5 pips, it would have taken a little bit longer. But we could have been on with our day and doing whatever, looking for more trades. I'm just going to speed this up in fast motion now and just see how much more it goes, because the 3 to 5 pips is really just a starting point. You can always look, once you become a little bit more proficient at trading and learn some advanced techniques, you can identify when you can take more. So I'm going to stop it right there. So you can see this thick orange trade is usually we're just looking for a bump, okay? And so we bumped up, and a total that it moved was about 6.8 pips. So 5 pips was pretty good. That's why we say 3 to 5 pips is a really good number for this trade. Sometimes it will move more, and we'll teach you more about how to look for that.